Welcome. This is the ATRAM webinar series. We are about to start in a few minutes.
Do you want to make your money work for you but find investment intimidating? Do you want to build towards a better future? With ATRAM Group's funds, you can invest according to your interests and values. Investing is now made easier and affordable. Step into your future self, invest to reach your goals and aspirations. Matching your risk appetite and investment horizon has never been this easy. Let us help you maximize your earning potential by writing the growth story of the Philippine economy and opening your doors to the international trends in the global markets. Let us prepare you for a better financial future. At ATRAM, we're making lives better through investing.
Welcome. This is the ATRAM webinar series. We are about to start in a few minutes.
Investing may feel intimidating, but once you learn a few basics, it's actually easy to understand. And understanding and using that knowledge to your advantage are some of the most important things you can do to achieve a financially secure future. Here are 5 things to consider when investing. Remember, SURE. S. Size. Know how much you are willing to invest, given that investing doesn't promise returns. Allocate money first for needs and paying off debt. H. Horizon. Before you start investing, you should determine how long you're willing to keep your money invested for a specific goal. Long-term investing, at least 5 years, is best as it allows you to ride out market volatility. The longer the time horizon, the more aggressive or riskier portfolio an investor can build. O. Objective. What are you investing for? For some, it's a short-term goal, like saving up for a car or maybe a vacation. If you need the money soon, you should invest in less volatile investments. On the other hand, your retirement or your child's college education allows you to invest in riskier investments compared to closer objectives. R. Risk tolerance. Not all people are the same when it comes to the risks they are willing and able to take. Do you prefer stable price movements without volatility? Can you stomach short-term paper losses in exchange for higher potential returns? It's best to know yourself. E. Experience. Experience is the best teacher. Actual investment experience keeps one level-headed in making decisions. Investing experience also broadens one's knowledge of different investment instruments. So, before you invest, make sure you keep these terms in mind.
Welcome to the From Goals to Gains webinar, where we embark on a journey to kickstart the year on a right note, and of course, stay on the path to success. Join us as we embark on this enriching experience and delve into crucial aspects of personal and financial development. So, of course, before anything else, I would like to introduce myself. I am your host, JP Chong, Business Development Manager in ATRAM, serving as your bridge to an afternoon filled with informative and insightful discussions crafted to guide you, our audience, in setting realistic and smart goals for this year. Before we start, please be advised that this webinar will be recorded and shared to all our social media platforms for your reference anytime and anywhere. So scan that QR code that's found in front of your screens right now. So whether you are a beginner to the world of finance and investments or a seasoned investor, as we call it, who wants to stay up to date with the latest investment news and strategies, of course, in ATRAM, we got you covered. Our YouTube channel, that's at ATRAM Studio, provides a wide range of videos covering the latest market updates on finance and investment topics, past webinars, and even ATRAM itself. Please make sure to subscribe to our official channel and click that notification bell so that you'll never miss an update when we release a new content. You can also visit our website, and that's www.atram.com.ph for a more comprehensive information on the market, finance, investments, and of course, all the funds that we provide. All of these can also be found on our social media pages, so make sure to follow us by scanning that QR code again, flash on your screens. Of course, for a more active and engaging discussion, we highly encourage you all to share any burning questions that you may have on today's topic. I'm pretty sure for those who are our listeners out there, you have lots of questions in your mind. So you can do that, ask those questions before and or after the talk. So don't be shy and please feel free to send them through that Q&A tab located below your screens. Remember, each question you send is a raffle entry for a chance to win limited ATRAM merchandise. Winners will be announced at the end of the webinar, so please make sure to stay tuned until the very end. Before we delve into the meat of our discussion, let me share a glimpse into the incredible career of our speaker for today, Mr. Rex Mendoza. Sir Rex is the President and CEO of Rampver Financials, one of the largest distributors of investment funds in the Philippines. He is also a serial entrepreneur with several companies and endeavors in multiple industries. Sir Rex is the lead independent director of Globe Telecom and Ayala Land Logistic Holdings Incorporation and independent director for Ayala Land and National Reinsurance Corporation. And these companies are all listed in the Philippine Stock Exchange. He is also the chairman of Singapore Life Philippines and the Solivo Funds and director of Esquire Financing, Seedbox Technologies, G Exchange Incorporated, the Blue Leaf, the Cullinan Group, and Mobile Group, to name a few. Sir Rex is recognized as one of the best in business, leadership, finance, marketing, and sales speakers in this country. He is also a best-selling author, financial advisor, and a business mentor. With that, our dear audience, it is my pleasure to present to you all Mr. Rex Mendoza. Hi, Sir Rex. Good afternoon. Again, thank you very much for joining us this afternoon. And of course, taking your time to share your expertise to us and to the viewers or to the audience out there.
Thank you. Thank you for that warm welcome, JP. It really is quite an opportunity today. As I've mentioned, it's my first webinar of the year, and it really does have to count. Our audience will have to find this whole webinar really worth their time.
And it's also the best time to really reassess, think about your financial goals while the year is still fresh.
Exactly, JP. You see, that's the main topic I have today. It's the psychological and the behavioral part of it. While we're going to be discussing how it impacts our financial track, our investments, it's really more the kind of behavior that we're gonna have to start the year and to start it right.
All right, thanks for that, Sir Rex. Without further ado, I'll give you the floor so that you can share with us all of these valuable insights.
Again, good afternoon, everyone. It's my honor and privilege to be here and have this webinar for you. I'd really like to have something of impact just to make sure that we begin the year right and we take a lot of value with this opportunity to start a new leaf. See, we focus on New Year's resolutions at the start of the year. Unfortunately, not a lot of us stick to these. And it's not only in our financial lives, this can even be, connected to our health, connected with relationships and stuff like that. But certainly the financial and the abundance track will be one area that we need to really look at and like focus on to make sure that we're effectively taking advantage of this fresh look within this new period. But before we even do that, I'd like to be able to come up with a little check or a little, background monitoring of what has transpired for 2023. Let me move on to the next slide, please. So basically, we need to come up with a review. We have set objectives for ourselves. And, I like what ATRAM has introduced, SURE. So always remember SURE. And SURE also prompts you to be able to put yourself on track, revisit the kind of, size, horizon, etc. Right? But you have to know the track you're running on and how you perform vis-a-vis that track. So I ask a lot of people, especially the ones who had a very, very volatile experience for 2023. Sometimes, people get to equities looking for growth, having portfolios that would really have, capital appreciation for the future. But when markets become turbulent and markets really fall, they get out of their positions and move on to fixed income. Nothing really wrong with that. Rebalancing is to be done from time to time. But I'd like to be able to say that you do that for a purpose. You don't do that because of what's happening. See, when you do that because of what's happening, it's already too late. And when you're behind the curve, it's going to be messy. So think a lot of people have equity positions for the year, hoping that 2023 will be a good year for equity investments. Unfortunately, things turn sour with inflation, with interest rates rising, with wars and geopolitical tensions. So what happened? The market slid, and that's the time they pulled out and moved on to fixed income. Unfortunately, by the end of the year, the market closed strong. And starting this year, obviously, the market's actually catching up. So a lot of people are finding themselves getting out of fixed income and moving into equity. So this is where we get whiplash. This is where a lot of people lose faith in what they do, lose faith in strategy, because they don't know that the key is asset allocation. If you start with the right asset allocation, right? Whatever markets do, you're going to be in a position to take advantage. Like if interest rates go up, you have a fixed income portion of your portfolio that you put in there not for the returns, but to cover for liquidity risk and, more importantly, a short-term time horizon. That's the reason for having that fixed income part of your portfolio. Unless you really have long-term bonds and long-term bond funds, that would be an integral part of your balancing because you're not exactly too much of a risk taker. If you're risk averse, glad to have a lot of that fixed income within your portfolio. However, that has to be a position. That's not just a fair weathered position. You're not supposed to switch here and there. You're becoming a fund manager. We do things for a purpose. And that's the reason why we delegate certain things to experts. You don't get into self-medication and put your health at risk. But that's exactly what we do for our investing. We sometimes invest in funds and we juggle the funds while within the year. So what are we doing? We're managing the fund manager. So when you do that, you get yourself to wrong exposures. You get to yourself to making decisions that are not really matched for the moment. So just to give you an understanding, that asset allocation will have to be based on SURE. And unless anything substantial really happens to you, your own basic view, you're supposed to be steadfast in sticking to a strategy. You're not supposed to change that just because of what markets are doing. And, talking about managing funds ourselves, I ask a lot of people, like, I have a lot of experience in this. Many people know out there that I've been in this industry for like about over 4 decades. So I can manage funds. But when I find out that, I've been doing a lot of things, traveling, speaking, doing a lot of, business work, corporate, as well as entrepreneurial activities, I find myself having more time for the things I love doing and less time for managing the fund. So basically, I understand that it's better to just entrust money to partners like ATRAM who've been doing well. So if you move on to the next page, I'd really like to challenge some of you. Check out what happened to your fund portfolio in 2023. Because the total market was down 1.8%, negative 1.8%. That's how the index went. But discussing this with a lot of friends, I know that some of them lost more than 1.8%. Many of them actually dabbled into second liners that didn't do pretty well. When we talk about 1.8%, I mean, that's the index. So if you do worse than 1.8, you would have been better off with an index fund. But why do, you know, focus on an index fund if you have a partner like ATRAM who can do marvels with what they do? I mean, they're full-time, they're equipped, they're experienced, and most importantly, they do this for a living. They do this for a living. So if you're going to be looking at getting experts to do the work for you, this is the kind of return you're going to get in a bad year. In a bad year. So if you're going to be looking at the funds that we sell, the funds that we distribute for the ATRAM portfolio of funds, you look at what they do. I mean, I highlight the Alpha Opportunity Fund. It did 9.58% on the positive versus a market that is contracted by 1.8%. So if you didn't do higher than 9.5, I'm going to be questioning the amount of time and effort you put into managing your portfolio only to find out that you're not going to be performing well. So I would have rather given it to ATRAM and not even on a one-time, big-time strategy. I would have, over time, have the disposable income on a monthly basis to add on, which meant that for the lowest of the lows of the last year, 2023, I was able to position myself, getting and snapping shares of these funds at rates that are much, much lower than the opening price. Because there was a time when the market was, -5, -7, which meant on a technical basis, I did more than 9.58 by entrusting things to ATRAM and still doing what I do best, right? If you can have a professional driver, a chauffeur to do things for you, why don't you just take out the stress of the entire activity, sit at the back, and do something else that you're definitely good at? That's the challenge that I have with a lot of people because they miss out the fact that asset allocation and diversifications that would be musts in managing our portfolios. But let me move on to the real topic I really have for today, beyond the review. Can we go on to the next slide? See, why is there some logic behind all of these New Year resolutions? Because I'm really going to be offering money resolutions for 2024. Tips and money resolutions that will make you do better this year if you haven't been doing some of these. There is a logic in making sure that we have the right resolutions and we implement and execute them at the beginning of the year. And how is this? Can we move on to the next slide? See, there are reasons for this logic. First and foremost, right? There is always a fresh start effect. The fresh start effect is the fact that you're starting a new mental accounting period. So it's almost like you're opening a new chapter to your life. It's much like a taxi meter that gets reset. It's almost like pardoning yourself for all the mistakes you did in the last year. Clean slate. Once you have this mental picture that brings forth a fresh view of the coming year, you're more motivated. There is a natural spike in that motivation. And we need to take advantage of that. We need to take advantage of that because we obviously are really purposely driven individuals. people on a natural basis are driven by purpose. So your purpose for the year becomes, more clear than the same purpose when you're about to close the year. That fresh starts affords you the view that we can do things right at the very onset of this new chapter. And this new year is going to be very important. Unfortunately, not a lot of people do well in this particular situation. Next slide, please. 92% of all New Year's resolutions fail. These are actual behavioral studies done by most notable and respected universities in the United States. 92%. So let me just clarify this. 9 out of 10 of people who do resolutions actually fail. And why do they do that? Next slide, please. There are reasons for this. And the reasons are as follows. Number one, we give up too soon. For a lot of people, okay, can we push that? So, yes, okay. For a lot of people, when they don't see any improvement or development, and let's just say a few weeks would have passed, or maybe one whole month, by February, they feel that what they've set for themselves will not be realized for the year. So they give up too soon. They give up too soon because sometimes it's this big kill mentality that also haunts us. We want big changes, and those big changes, if it doesn't happen every month or more so, the very first month, we lose sight of the goal. We lose sight of that direction. We go back to feeling Novemberish or Octoberish all over again. And that's the reason why monumental changes are very difficult to get by. It's very important that a lot of people know if you really want big changes, try to get the big change for the entire year. But if you want real changes to happen, try to get minute changes every single day. Can you just imagine on any particular note, whether it's knowledge and comprehension, whether it's on the physical side, if you improve yourself 1% a day, you're going to be 3 times better the person you were by the end of the year. Just 1% a day. But not a lot of people do that because people want to believe that they can do 30, 40% improvement in a given get-go. That's the difficult side. Second, the lack of commitment. Eventually, we're not exactly so serious about it. Like, let's say we pin down, I want to have an emergency fund of 6 times my monthly income this year. That's a very good goal. That's a very good target. But when a few weeks passed and, all of a sudden, there are sales in January, there are stuff that you can buy, which has been on the store shelves for a more expensive price during December and it has gone down, then you find yourself buying. So nothing to invest because you've spent more than you can, really earn. And then in the following month, you do it again. And before you know it, it's already March and you haven't moved the needle on your 6 times monthly salary for emergency funds. A real reason for the lack of commitment for a lot of people is also the exposure. Instead of being in a community that discusses financial responsibility, instead of being with people who are thinking about future financial wellness, every weekend you're going to be at the mall. You're going to be exposed to all of these temptations. That will test your commitment. And definitely you will fall prey into temptation. And lastly, this is really the most controversial of all, is the myopic focus on goals. People are going to say, Rex, diba, that's the reason why we have the New Year's resolutions. It's all about the goals. See, that's the problem. This is an issue. And if you guys have read Atomic Habits, it contests the absolute focus on goals. Because as far as James Clear is concerned, goals set direction. they don't measure progress. It's almost like a hurdle at the end of the period. And if that hurdle is way far, December 31, then we do a lot of stuff within the months and then we lose sight of the actual goal. So if you're going to be looking at it, let's define goals per se. Next slide, please. Goals. So what are our goals? They're results. They are milestones that we try to, you know, eclipse or reach. Levels of achievement that we want to have in our lives. So think about it as a destination. Think about it as a direction. You want to be financially well. You want to be, uh, really financially free. What do people say? It's not identity. What do they say? I want to have X amount in my investment portfolio. I want to have 5 million in my investment portfolio. The goal is actually a number. And usually that number is a high number. That also makes it difficult to hurdle psychologically, especially if you're not moving the needle on the numbers. So again, let's go back. So what should be? If it's not going to be goals, Rex, paano na? What should be the drivers for development? What should be the driver so that I can go back to these milestones? I can go back to this goals and New Year's resolutions and carry them on effectively all throughout the year. So again, let's go back. Slide, please. Forward. The focus of success doesn't have to be the goal. The goal is important. It has to be there for setting direction. But in terms of making progress, what we need are systems, processes, and habits. I will repeat that. Systems, processes, and habits, because these are what you're going to be doing. These are going to be your exposures on a daily basis. The goal is too far from where we are. So what do you do to get to the goal? That's the most elementary type of approach that has to happen. Because what you're going to do on a daily basis, what you're going to do on a weekly basis will be based on your systems, will be based on your habits, and will be based on your processes. And the author of that book, Atomic Habits, has said this, next slide, please. You don't rise to the level of your goals. You never rise to the level of your goals. You fall to the level of your systems. And that's the reason why sometimes goals are our ceilings. They're the glass ceiling. Whatever we do in terms of system, that's where it all carries us. Unless we get into what a lot of people expect, like a big hill, right? Your systems take you in terms of output in the same direction of your goal. But for many of us, short of that goal because the system is not enough. The habit isn't enough. And then in this session, I'd really like to be able to translate that on a financial approach for the year. Again, money resolutions, but done in a way that's habit focused, that's process focused. Because the key is not the destination. The key isn't even the direction. The actual key is the system. It's the execution. So, mind you, we'll have to be able to do this. So, how do we start that? How do we make habit-focused systems? How do we make sure that we're directed on a daily basis? Because again, we don't want big moves monthly or quarterly. We want daily developments and improvements. So the first step is to have a new identity. Have a new identity. Because this is something I've heard from Tony Robbins many, many times. You know what he said? We will always behave. We will always do things, believe, have values that are in consistency with the identity that we've set for ourselves. We have to have an identity, and that identity is what we gravitate to in terms of what we do. So let me give you an example. If your identity, okay, I'm not a morning person. That's your identity. You're not a morning person. So what do you do? What will your systems be? Number one, you probably watch TV or open your iPad or get into YouTube or TikTok at the late time of the evening. And you're going to justify this to yourself that you're winding down, right? You're winding down your mental faculties. What will happen? You're going to sleep late. You are going to sleep late. So that's your process. Your identity is that you're not a morning person. Your process will support that identity. So what's the end result? You cannot operate in the morning. You will wake up late and be a little drowsy. You're probably gonna drink 2 cups of coffee, hoping that your mental faculties get to be sharp before lunchtime. But you're going to be better in the afternoon. In fact, you're going to be very good at the evening because you've translated and reversed your biological clock because you're not a morning person. If you identify yourself as a morning person, then you're going to try and have a system where by 9 or 10 o'clock, you're in bed. And you're in bed not watching a screen. You're in bed really hoping to close your eyes and relax so that the important 10 to 2 would be a deep sleep for you. And then you can really wake up at 5 and be sharp in the morning. Then now, you are going to be making results follow through in support of your idea that you're now a morning person. So it's the identity that drives the behavior. It's the identity that drives the processes. The results will happen, and all the more it feeds back to that same identity. So the real first move is this. I'd really want you to establish your identity, your financial identity. I don't want you to think, by the end of the year, I'll have 5 million in my investments. No, that's not the way to do this. The first thing to do is to change your money identity. And how are we going to be doing that? Either one of two things. One of two things. Number one, set forth an identity that I'm a person who will achieve financial freedom. I am a person who will achieve financial freedom. That is one of the first identities that we can have. But that's even futuristic. I will. For some people who are really very good at this, they will affirm that they already have financial freedom. They will say, I am financially free. That's a difference. That's a big difference because you're already claiming it. And what is financial freedom? Financial freedom is being able to do whatever you like because the impact of money is irrelevant. Let me repeat that. You do anything you like because the impact of money is irrelevant. You do what you want to do because you don't need to earn the money from whatever you do. You'd want to travel? You can because you have the money for it. Your decisions are not going to be hampered by a limitation of money. Money is never a control function for you because you have enough. And that important identity of being financially free has to be articulated very well. And how do you articulate that? By saying this, what is financial freedom anyway? Financial freedom is wellness on steroids. What is wellness? Wellness is having security and freedom of choice in the present and in the future. Freedom is something else. Through independent income and asset abundance, you have security and financial freedom today and in the future. What does that mean? You're financially secure. You can have all that you need. And more importantly, financial freedom of choice is doing whatever you want to do. Because as I've said, money is not an issue. Money is not even a concern. And how do you achieve that on a constant basis? Why is it on steroids? Because you already have independent income. Can you imagine if you have a portion of your portfolio that is set aside that brings you a guaranteed amount of, let's say, this is very relative. It depends on what you want. But let's just say for me, it's like 1 million a month. If I have a portfolio that pays off a fixed income return that's guaranteed that over 8, 10 years or 20 years, 1 million a month, then I am going to be financially free because I have that freedom of choice and that security because my income is independent of me. The income is coming, it's passive, it doesn't involve me, it doesn't involve my time, my expertise, and anything I'll do. I'd probably do things that can still earn money for myself, but that's irrelevant because I already have money that's enough for my needs independently. And second, I have asset abundance. I have assets like real estate. I have assets like precious metals, gold and silver. I have other, even artwork and all of that stuff. That when push comes to shove, I need a big amount of money. I can sell assets to cover for any particular day. But the key is to have both. A combination of asset abundance and independent income. In so doing, you're really financially free. See, many of us think about an X amount of money to be our goal and our target. The real target has to be identity. And out of that identity, you're going to be coming up with executable things that can be done on a consistent basis. So let us go back to that. How do we do this? As I mentioned earlier, the identity brings forth the processes, and the processes get you an outcome. So let me just get you an example on this. If your identity, okay, let's say physical identity, I am fit. I'm a fit person. I'm physically well. Then what do? You come up with processes that will make that physical wellness really happen. And your outcome is like you're rarely gonna get sick. You can live an active lifestyle. You can travel and all that. That's for physical wellness. How about financial wellness? Your identity, as mentioned earlier, is achieving financial freedom. That's the identity. I am going to achieve financial freedom. But what's the process? How do you do the process? I will save and invest 20% of my total monthly income. 20%. So that's a system. 20% of my income. And if I have probably excess, that 20% can be higher. But it will never be lower than 20%. So it's a system. It's every month you're going to be doing it. Whether the market's doing well, the market's doing poorly, it's asset allocation. There is a set of percentages that you're working on for balance funds, for bonds, for even REITs, and even your equity portfolios and exposures, even not just to local but Asian markets and international markets. Can you imagine if you have like that? And your problem with your 20% is basically allocation. Which piece gets more in a given time? But every month there would be a 20% of my income that's allocated across that. So what will the outcome be? The outcome will get to the point where when I'm age 60, I can sell certain assets and probably buy a risk-free bond at 10, 15, 20 years. That will be computed backward so I can generate 100,000 guaranteed monthly income. So 100,000 will come in no matter what I do. I still have excess money to manage. I still have excess money to play around with. But I have, in the past when Brother Bo was not really a very close friend, I called it FU money. It's FU money. It's money that's coming in, and whoever my boss is, whoever the company I was working for would be, well, I won't care because I have FU money. I now call it an emancipation fund. Okay, that is the outcome. I have an emancipation fund that comes to me every month, no matter what happens, through hell or high water. I have 100,000 a month. And that 100,000 a month is good for me, my security, and my financial freedom of choice. But as I've said, for a lot of people, 100,000 might be enough. But for me, it might not be. It can be a higher amount. Let's say for some of you, it can be 200,000. For some, it can be 500,000. For some, it can be 1 million. But how are you going to go from where you are today to that point? Again, it's the process and it's the habits. It has to be very clear. And once you know how this process works, you can now get into the money resolutions, because the money resolutions are going to be focused on processes, right? So again, money resolution number one, create new sources of income. As a financial advisor, I am not so fond of budgeting. I'd rather have big money flowing in so that I don't scrimp and, deprive myself and my loved ones. So it's better for me to expand that income base. So how does that go? If you're a financially free person, you will have to have income coming from different sources, because one source of income is not enough. A real millionaire on a dollar basis, on average, has 7 sources of income. If you have less than 7, you have to build up to reach 7. It can be a business. It can be, an investment. It can be, an extra sideline or extra side hustle, right? So every quarter, you have to promise yourself a new source of income. So much so that by the end of the year, you'll have 4. If you're doing one source of income every quarter and you generate one new source of income every quarter, you're going to have 4 by the end of the year. If you promise yourself to do once a month, one source of income, then by the end of the year, you'll have 12. And for a lot of people, it's tough. Why? Because we argue for our limitations, and sure enough, they're ours. What does that mean? I don't have time. I don't know what to do, right? I'm only good at my job. I can't do something else. You can be trained. You want to be an independent financial advisor for Rampver? We can train you. You don't have to leave your job. How about that? Focusing on your own financial track to achieve your dreams and sharing the same system with other people and earning through the process. Can you imagine helping friends and earning from the process? We can train you. We can provide you the support of our entire company, making you a catalyst for change so that the Philippines will be a more savings-focused nation rather than a spending nation, because that's real. We have the lowest savings rate in this part of the globe, and it's pathetic, right? And the key to that is education. We need more people to educate others. That's new sources of income. How about other things? How about having a gig or maybe, going online and becoming an assistant for somebody else on your own spare time? Because the Filipino spends money on their spare time. The Filipino has to earn money on spare time. And that's the reason why, getting more sources of income would be easier if you are making that a part of your identity. That you're financially free because you have many sources of income. Second, build your emergency fund. Emergency funds put us in a position of stability. The real reason why the Filipino is all problematic with debt is the fact that debt has always been an answer to anything that happens in one's life. Somebody gets sick, someone gets hospitalized, somebody dies, then we borrow because we don't have money on the side for these surprises, for this crisis, right? If you have emergency funds, which can be 6 to 12 times your monthly income, and it becomes part of the system. Anything untoward that's necessary comes from the emergency fund. You don't need to borrow. You don't need to spend. It keeps you grounded. It keeps you basically able to weather storms, right? And then obviously, when you do that, after you do that, you can now settle debt. Because, Einstein says this, right? Compounding power is the most potent force in finance. If you're a borrower, that compounding power goes against you. The most potent force in finance is your enemy. If you're an investor, the most potent force in finance is your ally. So eliminate debt. And there's so many strategies to eliminate debt. For some people, they want to pay the higher interest, exposures so that they save a little more. I've always believed in behavioral finance. So when I do that, I focus not on the interest rate, I focus on the amount of the loan. And why is that? Because I want an inventory of my loans and I want them getting shorter every time I'm able to pay. When your list of debt goes shorter and smaller, you become psychologically powerful. You know that there is development. So you're going to pursue the habit continuously, paying off debt until you extinguish everything. Because you see that it's getting lower, you see that your list is getting shorter. There is momentum behind it. That's why I'd rather pay off debt in this fashion. Because momentum and behavioral motivation for me is more important than the actual financial side itself. Because eventually, it will come to the fore. It will always meet up and match up, right? And then next, what's money resolution number 4? It's implementing a serious budgeting process. So for me, the budget comes at number 4. I've seen a lot of money resolutions and it becomes number 1. As I've said, it's not exciting for me. That's why I really like it to be on the middle point of my resolutions, because there is nothing to budget if I don't have enough income. If I don't have enough income, I'm always going to be, on a deficit. So I'd rather earn more income first so that my 50-30-20 rule is going to be done pretty well. What is that? 50% would be for your essentials. 30% will be for your wants and likes. And 20% will be for your savings and investments. But that's not the way to partition it. That's the partitioning format. But the priority in partitioning is the reverse. I start with savings and investment, 20% taken out. Take it out. Because if you start on this side, eventually 20% will not be there. It will either be zero or a very small amount. So the way to do it is to start with that. Why? Because 80% will be enough. In fact, I challenge some of you to make 70 or 60% enough. If you start with essentials at 50% and you're able to bring it down to 45, you now have an extra 5% to invest. And more so, if your needs, if your wants and likes, if your wants and likes are not 30% anyway, if there will be months where you can bring it down to 10 to 15, then you have an extra 10 to 15 to put in your investments, to the point where your investments doesn't only reach 20%, it can be as high as 30 to 35. But if you do it the reverse side, you will never have enough to save and invest because it will not be enough. Walang sweldong nagkasya sa taong mahilig gumasta. No income, whether it's 7 figures. It's so easy to spend if you know how to spend. So very important that you start with what is there to save and invest. Number 5, start creating a portfolio. Invest and create a portfolio. And I'd really like people to focus on the most important long-term needs and requirements. Because top of mind, and this is shown by all the researches by Filipinos, their focus almost always is what? Children's education. Children's education. We're dati. We're Filipinos. We care for our children. You always hear that statement that says, No matter what happens, I give my child the education because that cannot be taken away from them. That's going to be what they will need to have a great life for the future. But they forget about themselves. I'm not going to say abandon your children and take out that responsibility and accountability. No. But I also like you to say, I'll take care of setting aside money for my children's education, but I won't forget myself and I'll also raise money for my retirement. Because retirement is one of the most important goals that you have. Can you imagine? A child's education you can borrow money for. You can borrow money for a child's education. But can you borrow for retirement? You're about to leave work. You're about to become unproductive. Who's going to lend you money? And no company, no matter how generous I think they are, no company is coming up with a retirement program that will make you maintain the level of lifestyle that you have before retirement. And that's the reason why you have to contend with retirement. If you can have a Pera account, ATRAM through Seedbox has Pera. It's an administrator of Pera. And I don't know why not a lot of people know the personal equity retirement account. I sat on that committee, that very first committee chaired by Senator Ramon Magsaysay Jr. That's how long it has been. And now that it's been implemented, there are only a few people who know. And that's the only program where the government really provides honest to goodness incentives for long-term investment. Can you imagine? You put up 100,000 and then you get a 5,000 credit on your taxes. What does that mean? Hindi ka pa nag-uumpisa, kumita ka na ng 5,000. Your puhunan for a 100,000 placement is effectively 95 because you get a tax credit of 5,000. If you're an OFW, you can do this up till 400,000. And if you're, a local and you're working within the Philippines, you can do it up to 200,000. And not a lot of people know it. You can invest in ATRAM funds, staying within Seedbox, and get all the tax credits and tax-free returns getting into your future. That gets compounded for your retirement. So think about it. Very important that we know that we have to establish separate investment portfolios for particular needs and objectives that we have. Next slide, please. And if ever we're going to spend, let us make our spending count. There is such a thing as hedonic adaptation. What does that mean? Ladies, we buy bags. Men, we buy watches, cars. It gives you a spike in terms of happiness. But hedonic adaptation means that after a certain period, that happiness goes down. It's a treadmill. So much so that you're getting to buy stuff from time to time just to make yourself happy. And if you're going to be adapting anyway, then you get to ask yourself, if you're a woman, you're looking at, like, let's say, a 200,000 baht. A 200,000 baht. What if you lower that to 100,000 baht and have 50 dinners with your partner of 2,000 pesos per dinner? So this happens once. This happens 50 times. The hedonic adaptation of this is going to be fine and narrow, which means you're going to be a lot happier than this that takes you on a blip and normalizes you, and after that, there's nothing else. In fact, in hedonic adaptation, what happens is that big thing that you bought, that, like, let's say, supercar that you bought, the first time it gives you that clinking sound, that's a serving, that's somehow serving notice that the car is getting old. You get hurt. You spend top money, you get hurt. The bag that you bought, nagasgasan, you get hurt. So the happiness that's supposed to be there immediately drops because you're buying material things. Making spending count tells you that you have to shift spending towards experiences, because experiences leads to more consistent happiness and to more lasting happiness. So I cannot, stop people from spending. They will spend, but make the spending count. Do it in such a way that will make you happier on a longer period. Lastly, my money resolution number 7, understand and appreciate money better. Learn personal finance and be financially literate. Watch videos. ATRAM Studio has a series like this. If you didn't watch all of them, you go back. Watch in everyone. See, you become the person that's raised by the knowledge that you have as a foundation. If you've been watching YouTube and TikTok and you've been watching entertainment, things that make you laugh, things that make you smile, nothing really wrong with that, but that's the person you become. You want to be abundant? You have to know more about handling money. You have to know more about the way money works. Opportunities for increasing your propensity to earn money. It can be entertaining. You can watch Rampver Financials YouTube channel as well. It can be entertaining. But you learn something. Second, choice of friends. Choice of friends. Are your friends financially responsible? If your friends are not financially responsible and accountable, guess what you will become? That's your exposure. I certainly frown upon friends saying, we don't want to discuss money. That's taboo. Well, if you don't do that, how can you be responsible? I am with a group that discusses how money has empowered them. And I learn from each and every sharing that happens when we're together. I learn. And that's the kind of, friends that I want. Friends that inspire me. Friends that tell me I still have a long way to go. Because you're going to be catching yourself in a wrong sense of false contentment, which is not aligned with the talent that you have, which is not aligned with the value that you have as a person. So be financially literate. Join a community. There are a lot, IMG is there, Truly Rich Club is there, communities that can help you learn more and become more aware of what you can do. And again, when it comes to execution, finally getting into that portfolio, you can make things happen by investing in our industry leading partner. Of course. Next slide, please. Our industry leading partner is obviously ATR Asset Management. What we did was to come up with a platform that can make the habits happen. Because obviously, sometimes it's tough to invest in big houses like ATRAM if it requires big amounts, right? Starting amounts are gonna be big, but with Seed Box, as I mentioned, Terra, with G Invest, and now with Rampver Online, you can start with as low as 1,000, even lower at times. So there is no excuse. I tell you, we just came from Dubai and we ate in a restaurant where both the owner, the chef, and all the waiters are investors in mutual funds in the Philippines. And they listen to our YouTube channel, they follow us, and habitually on a salary deduction basis, the owner sets aside money. Because that's exactly what happens to the OFW, right? They earn, but they spend and they send the money, they remit it to the Philippines, and the family here just spends it as well. So it's a matter of taking money out of there on an habitual basis to make sure that they create a fund that's going to be good for, themselves and their future. So there is Rampver Online. Can we go back a slide, please? Slide before this. There is Rampver Online. You can invest in mutual funds. And as I've said, the most popular in this particular platform will be the ATRAM funds, right? And it is small. That is what you need to do. See, sometimes we also, as I've mentioned earlier, expose ourselves to the temptation. You go to the mall, but you don't even have to go to the mall now to tempt yourself. You have your cell phone. If the most visible applications on your cell phone will be Lazada, Shopee, if it's going to be all this, Amazon, then you're setting yourself up for spending. You want to have the right habits? Get Rampver Online on your phone. Have a portfolio there. It should be the first that you get to see on a regular basis so that it gets to remind you that adding on to what you have has to be a habit. It has to be a regular, consistent part of your month, part of your day, part of your week. It makes a change. It does make a change. And can we move on 2 slides now? 2 slides forward. All you need to do is to create an account, complete the client application, no forms, all within your mobile. And once you're approved, you can start investing in a recommended fund. Start investing in an ATRAM fund. And you've seen the numbers earlier. If you haven't done as good as those numbers, you better stop doing it for yourself. You're just going to be losing money and losing time. Again, to each his own expertise. You're a doctor, you're an engineer, you're a corporate executive. Do what you do best. Give the investing chores and the responsibility and accountability to these full-time experts and professionals because that's what they do. You're just going to lose sleep over this. And you're losing sleep and you're not even good at it. That's going to be a point of contention. Next slide, please. And again, another one. So visit us at online at Rampver. You can through this QR code get into all of our platforms: Facebook, Spotify. We also have a podcast, TikTok. We don't dance, but it's still that knowledge and focus on financial literacy and personal finance that we share with a lot of people. And lastly, I end with this slide. We don't do things for ourselves. You really want to have a focus on your future, your identity as a financially free individual. You have to you have to hedge it in a very important foundation, and that would be your loved ones. You will do things in a very different way if you know you're doing it for people you love. There is a difference between the kind of attitude you will take for your accountabilities if you're doing it for other people aside from yourself. It takes on a very, very different picture. You anchor everything on what truly matters to you. Then you don't have to look for the motivation. You don't have to look for the inspiration. You will be doing habits that will redound into constant processes and systems that will take you to a new identity, to a person who's going to be more prosperous, more abundant, and best of all, financially free. Thank you so much and good afternoon. Thanks, JP. Maraming
All
salamat.
right. All right. Thank you very much for that, Sir Rex. So before we let you go and have your bio break, would just like to thank everyone for really finding the time to have this very informative, hearing the valuable insights of Sir Rex for this afternoon. Actually, per se, there are a few points I was writing down while Sir Rex was discussing, especially nakailang underline sa akin yung walang pera na kasya sa taong mahilig kumasta. That's really something that really struck me the most. And that you have to create that new sources of income, ika nga, so that your family will not sacrifice whatever lifestyle that you have. So with that, Sir Rex, we'll just give you a little bit of short of a break, and we'll call you back for the Q&A portion. Thank you, sir. So before we proceed to the exciting part of the webinar, the Q&A session, let me show you all where you can invest as you embark on your journey to turn your goals into gains, ika nga. So for those who would want to start or even jumpstart and gain their financial journey for 2024, especially to have that identity and being able to say, I will have financial freedom and we can make those habits or these habits happen, to quote nga, ika nga ni Sir Rex, these are some platforms that you can go into, as Sir Rex has mentioned. Dapat hindi na Lazada or Shopee or even Amazon that you check on a daily basis. So these platforms, these partners that we have, Rampver Financials, Rampver Online, Seedbox, and even Gcash, that you should check. You can check the market. It's easier for you to start to jumpstart yourself. So just like, gone are the days, especially like years before, when you want to invest, you have to go to the branch, line up, sign a few forms, and Sir Rex has showed in a couple of his slides that it's easier now. Just go to your app, scan your ID, log in, and you can do that. You can do that in the comfort of your home. Right? Thank you very much for that. And of course, ATRAM is proud to announce multiple accolades in 2023. We are hailed as the best investment solutions provider, most innovative fund management firm, most innovative fund offering company, best asset manager, and the best fund management company. Notably, ATRAM also won the Asset Management Company of the Year, and we were highly commended from the Asset Triple A Sustainable Investing Awards in 2023. So these recognitions serve as a testament to our unwavering commitment in creating cutting-edge investment solutions and proven ability to help our clients, our clients, of course, achieve your financial goals. Thanks to our dedicated team and the ongoing confidence and support of everyone, our clients, our partners out there. And with that, I hope, Sir Rex, you're able to have your very quick break. I know our viewers out there are very excited. We have seen questions coming in, and it's now time for the Q&A portion of the webinar. So yes, we received questions, but we still encourage everyone to send in more questions, and we'll try to address all of them this afternoon. So with that, without further ado, I guess I'll start with the first question, Sir Rex, and this is addressed to you. So, Sir Rex, how can you maintain a so maintaining a motivation can be tough. So could you share a technique or habit that has been personally helped you to stay motivated in achieving your financial goals?
Actually, I've done a lot, JP, in understanding myself and the way, you know, that makes me tick. Certainly, rewarding myself for as you do it for other people, you have to do it for yourself as well. If you've done something good and you know that you probably need to prompt yourself to do more of that, then why not reward yourself? Why not, give yourself a break, so to speak? So there are important measures and ways where I attach a certain thing that I want to a certain achievement or milestone that I have to meet. So certainly there are internal incentives that I also do. And we also do it within the family. We think about ways and means to get certain targets going, and based on that, we reward ourselves from achieving these milestones and this particular goals in our lives. Now, the more important thing, though, I go back, is again the process and the system. Ibang-iba pag you don't have to think about it anymore, that you don't need to prompt yourself about it. So, which means if I can do something where things get automatically done. Like for example, in a given bank, right? You now have a bank, and certainly there is a link up between the bank and, let's say, Rampver Online. I prompt my bank to automatically withdraw, right? A certain amount for a certain investment. It can be real estate. It can be um, a stock position. But the important thing is knowing that it can be automatically done. So you don't have to think about it anymore. So I guess for most part, I believe in the past, no, para mas maganda pa nga, post-dated check eh. So I don't, I forget about it, but the discipline is actually established. So I give Rampver Financials a post-dated check. That post-dated check will be, will be money that will be invested in, like, let's say, 3 ATRAM funds. And, Rampver Financials will take care of it on a monthly basis and just give you the statements every quarter, every end of the year for a review so that you get to see. When you do that and it becomes automatic, you even accord yourself of the right decisions even if markets are going wrong. Because the real problem is that down yung market, takot ka. Hindi ka mag-i-invest eh. You're gonna say, oh, I'm gonna wait for it to recover. And guess what? It recovers, you haven't invested. By the time you do, mataas na. So, I'd rather be disconnected. So much so that the habit becomes automatic. So I do it. That's the kind of strategy that I have over and above the incentives that I shared earlier.
Right, great stuff, Sir Rex. I think this is also in connection to what you said. If people, start being scared, or if the market goes down, especially bumabalik lang sila pag tumataas na. So that's what we call in the investment fields the FOMO effect. Fear of missing out ka na. So sayang, you could have started early when it's lower. And especially, again, to plug in also, that's why we do the portfolio investing part. So whatever market you go into, so whatever may it be, interest rates going up or down, you are there. You don't manage the fund manager, as you have said earlier. All right, I'll proceed to the next question. So what's a good minimum amount to start investing? So I can just take this, Sir Rex. So again, Sir Rex has mentioned earlier that it's in the process. So you remember the 7 steps that Sir Rex has mentioned on the 2024 money resolution. It's not really a one size fits all. Maybe no, some could earn more, could invest more, some can earn less and invest less. It depends on you. You should know yourself, you should know your process, and once you follow all of those process, it will be clear for you. And I think especially now for 2024, it's time to reassess, reassess your financials, talk to your financial advisors so that you can jumpstart your 2024. All right. So actually, Sir Rex, the next question is a very interesting one. I think you'll like this one. It's a kind of technical one. So hi, Sir Rex. What do you think is the reason why the PH stock market somehow lags the US equity, even though our economic fundamentals are more sound?
It's a very interesting question, and
Yes.
I guess there is a lot of truth to that. No, one of the biggest reasons is the breadth of the market that we have. If you're going to be looking at the US, the biggest components of their index right now, the overall breadth of that US market, Dow Jones, NASDAQ, etc., they're almost always huge technology stocks. So the big ones are Amazon, Google, Facebook. They have a lot of those companies within their markets. Unfortunately, in the Philippines, we don't have them. So when the pandemic hit, and up till last year, technology companies have been doing very well. In fact, there was a big run up in AI related companies last year for the US. The unfortunate thing is this, there is no, technology sector to speak about in the Philippines. So we were missing out on that boat, but we have, companies like, can you just imagine if Gcash was listed, right? It's moved from like 50 million subscribers and users to about 88 million. We would have, you know, been a part of that. But the only way you deal with this is to invest in Globe. But within Globe, the value of Gcash hasn't been, you know, uncovered basically. So it's still within that base, but it's not valued correctly because it's not market driven. It's just asset based that's within Globe per se. So that's the reason why the US is up. Their technology market, their technology sector is up. And that's the reason why we tell people, if you don't have exposure to that, You don't even have to go to US markets. Eh. ATRAM is a technology, global technology feeder fund. You just need to go to G Invest and you can invest, a small amount and you can have that kind of an exposure. You don't have to be missing the boat. There are options that are all within our reach. So now you can be a global investor even if you only have what, 10,000 or 50,000. During my time, JP, if you don't have 5 million, you can never have an exposure to international markets. Today, the blessing is that people can have that exposure because of these feeder funds that we have in our portfolios.
All right, thanks for that, Sir Rex. And agree, the tech run, especially last year, 2023, or the years before 2022, was really a good run. So to echo what Sir Rex has mentioned, especially for our global technology feeder fund investors through all our platforms, they experienced around 30% increase if you've started, investing the start of the year of 2023 and you held it until the end of the year and until now. So yeah, thank you very much for that, Sir Rex. And actually, I like this question. I can take this, Sir Rex, but please feel free to add more if you deem so. So, what is the best fund to invest right now? So, I'll take a crack at it. It's not a one size fits all. No one fund. Not everyone can just invest on one fund and everyone will follow. It depends. As Sir Rex has mentioned, you have to know your shore. It doesn't mean that this fund is growing high. It's because it has a high risk. But you, as an investor, you are more on the moderate conservative type. So maybe it's not a perfect fit for you. So that's why portfolio investing is really the key. Do not manage the fund managers. And of course, again, as I've mentioned earlier, it's really now the right time to talk to you if you have financial advisors, to have that holistic view on your portfolio. It's really the best time to reassess your portfolio. Maybe your goals have changed, especially, you're starting the year fresh. All right. So, Sir Rex, I think this is a good question. Hi, Sir Rex. I'm an employee who's thinking to start my own business. What are the tips that you can give me? To be honest, I'm still scared. So, as a proud owner of your book, Firing on All Cylinders, I think maybe you can quote one from that book that you can share with our viewer out there.
The first limitation actually is our own fear. And there are belief systems that stop you from doing so. Like number one, I have a job, it's unfair to my employer. Number two, how can I do it? I want to do well, in my role, but I also want to dabble into business because I think I have a good business idea. The first thing that you need to do is to emancipate yourself from that kind of guilt. So what do? I ask permission. I ask permission. See, when you're disclosing it to your employer, to your boss, I can tell you, many of them will probably be even more supportive for as long as you're putting things out in the open. Because when you do disclose, that just means you're not hiding anything. And it's even better for them because they can see whether it's hampering your performance on the job or if it's in conflict with what you do and all that stuff. But I can tell you, with the kind of bosses I have in the past, no one actually stopped me from doing what I want to do. In fact, many of them were very supportive of it. Because of point number two. Point number two is more important. You continue to perform well. Right? You're paid for your work, you're paid for your job. But if you're worth more than what you're paid, then the company still values you. Whether you have five businesses on the side, doesn't matter because you have value to the company. You disclose it and you're a performer. And when you do that, you're earning your keep. In fact, they'll probably think your entrepreneurship is really a part of your fiber, and that's the reason why you're doing well on the job. So I'll settle that first. Number two is finding the time for it. And as I've said, many of us will have the time. Not having the time is an excuse that limits many Filipinos. Okay? I've been young once, right? So there was a time when I had a job, I had a business, I was writing for a newspaper, View from Top, Business World. I'm part of certain other companies, other boards, and I started very early. I had the time because if you want to do something, you'll make the time for it. What did I lose? I never watched a telenovela in my life, JP. So did I miss out on anything? I don't think so. But the time wasters are just gonna be there. As I've said, Filipinos entertain themselves, and before you know it, you have probably added what 3 hours per day to your entertainment. And 3 hours per day, can you just imagine? 7 days a week would be 21 hours and 52 weeks a year. That's half a year of productive life that you can do. So I ask a lot of people when people tell me, are you really busy? Are you see, I run 18 businesses today and I'm a director of 20 other different companies. So how busy are you? I mean, if you can like learn, expand yourself, what you know, create value, I think that would be the best thing that you can do. Again, the book says all that, firing on all cylinders, right? Don't limit yourself with a basic, you know, endeavor that probably doesn't make you grow. There will never be comfort on the growth zone. There would be discomfort, but that's requisite to growth. If you're comfortable, you won't be growing. You will just be resting and you will be getting into some sort of a false rate of contentment. Now, I will say this in finality. Sometimes people also don't think I can do that entrepreneurship within my job, right? So when I was in a company, another financial services firm in the past, you know that I was able to start businesses to create value for the firm. It was an insurance company. It did not have asset management. So I became part of asset management. The initial investment, JP, was 20 million pesos.
Wow.
That was Film Asset Management, 20 million pesos. You know how much that company was when I left the firm? It was 22.5 billion pesos. So it's entrepreneurship within a job, right? And obviously, I got rewarded for it. So you don't have to even get out of a company to be an entrepreneur. You can be an entrepreneur, or you can be a combination of both, outside and inside. But don't limit yourself because your limitation will be just within your own imagination. Let loose and do more.
All right. Thank you very much, Sir Rex. Really great insight. So, again, unfortunately to all our audience, that's all the time we have for questions. But before we end, Sir Rex, do you have any final words for us, for the audience, for all our listeners out there, for them to have those key takeaways this afternoon?
Yeah, JP, I'd really like to answer this last question of Sheena, no? Because
Sure,
it's
sure, sir.
really very important, no? She's a frugal saver when she was starting, but she's asking, when do I now enjoy my money? And that's the reason why I go back to your shore earlier, right? The
Yeah.
objectives have to include intermediate goals because some of the goals that we dream of have deadlines, right? At the age of 50, I had my own Ferrari, right? I wanted a red Ferrari that's convertible. Probably a lot of financial advisors will pop their eyes out and say, why did you do that? That's financially irresponsible. Hey, that's my dream. My dream is to be reality. And the reason why it's a convertible is because I like my hair wind blown. Can you imagine if I have that same car today? There's nothing to get blown anymore. So I even tell my wife, when will I have a Ferrari? Pag nakaupo na ako, tapos tumutulo na laway ko because pinapaarawan na ako. Wrong. You have to be cognizant of the fact that both intermediate goals and long-term goals have to be both fulfilled. And financial planning and financial responsibility is not just taking care of the future. Remember my definition of wellness, today and in the future. So financial freedom of choice today and in the future. It's not reserving everything for the future because what if something happens to you? Right? You don't want your lapida to say, here lies someone who wants to be happy tomorrow. You don't want that. You like money to work for you. Money is a tool, it's not an end. It's a means. So make sure it works for you, and it works for you, and most importantly, your loved ones. I guess with that, JP, that's my last statement for everyone. We do what we do for people we love, for real value and quality of life. Money is just a tool to make those things even better.
All
Thank
right.
you.
Thank you very much for that, Sir Rex. And of course, the time that you spent, the expertise that you shared with us, and providing great insights for this webinar to all our audience out there. And of course, thank you to our dear audience for their active participation. With that, I'd like to say goodbye to Sir Rex. Thank you very much, sir, again for joining us this afternoon. Right, sir? We sincerely now, did you know that for as low as 1,000 pesos, you can already jumpstart your investment journey? Here's how to do that or know more.
Good day. If you are interested in investing with ATRAM, the leading independent asset and wealth management company in the Philippines, please visit our website, www.atram.com.ph. We have all the details you would need to know about our funds. If you would like to start investing, click Invest Now. For further assistance and account opening, you may email our client services team. If you have more questions, visit the website's frequently asked questions page or ATRAM Academy page. We hope this helps. Thank you.
And there you have it, folks. Hopefully, that was an insight for you to know how you can jumpstart your journey. So there you go. So if you have any further questions or would like to learn more about ATRAM, please visit our website. That's www.atram.com.ph. Whether you're a beginner to the world of finance and investments or a seasoned investor who wants to stay up to date with the latest investment news and strategies, we got you covered. Our YouTube channel, and that's ATRAM Studio, provides a wide range of videos covering the latest market updates on finance and investment topics, past webinars, and even ATRAM itself. So please make sure to subscribe to our official channel and click that notification bell so you'll never miss an update when we release new content. You will also access our official social media pages by scanning the QR code found on your screens right now. Thank you very much once again, everyone, for joining us this afternoon, and we hope to see you all in the next webinar. This has been your host, JP Chong, and wishing all of you and your loved ones continued health and safety. Thank you very much again, and have a great day.